Hello everybody and welcome back to another video. In today's video, we'll be doing a deep dive into the SPY options of the next few months and what they're telling us from Wall Street's perspective. What exactly are those sneaky guys up to? We'll be taking a look throughout this video and a whole bunch more, including Tesla, AMC, gold, Bitcoin, and others. Stay tuned, guys. It's going to be a good one. All right, everybody, well, let's get into this video. Of course, we're doing a market recap for the close 9th of September 2021. And you'll notice here a few different things. Healthcare was down heavily. Real estate was certainly getting slogged. And really, it was just some of the good technical analysis levels that were holding up. PayPal, slightly green. Tesla holding, that has had a good breakout on it recently. And things like Microsoft, Apple, and the big FANG stocks overall were really down. We take a look at the sector indices and we have a look at the indices first. Yes, everything was down. IWM, the Russell, the smaller companies had a great morning and then a bad back end of the day. And I think the close is the key here. Selling into the close shows Wall Street wasn't exactly feeling super bullish, and they certainly trapped a lot of retail in that morning flurry of course, that buy the dip style mentality that everybody has right now. Looking at the sectors, real estate was the worst, followed by healthcare. We knew that by the heat map. Usually we do have XLP, XLU. These are the like kind of defensive sectors of the market. They were usually going to be more bullish if you do see that sector rotation. It happened the previous day. It didn't so much happen this one. Not much to note from that perspective. So I want to do things a little bit, shake it up a little bit more today. Firstly, VIX Volatility Index, and then I want to go straight into the SPY, the S&P 500, and talk about the options expiring over the next couple of months. Tends to see Wall Street trying to get their puts in early. So whenever a market crash or a market correction, and we're definitely not calling a crash or anything like that, but whenever those types of things occur, you tend to see bearish bets being placed at the same time that, of course, retail goes incredibly heavily into call options. Now, what we have here is the volatility index. We know that if at 16, we tend to get that really nice big bullish pressure that's coming off the VIX. So volatility tends to spike here. We've explained it in several videos why, and this is a level that you want to look at straight after, a recession or a massive pullback in the economy. VIX can go all the way down to 10, 11, 12, that kind of level and sit there for a while. But at least in the year afterwards, this tends to be a good zone for you to see that increased spike in volatility. We'll move over now to the SPY. So of course the S&P 500, and a lot of you guys trade this, and it is of course the most popular index in the world. And we know a few things. Firstly, we know this thing's in a beastly uptrend, and you never fight an uptrend. It's just not worth it. We also know the 50 exponential moving average has been an incredible dip buying zone. Remember, the futures did get to here, and then it traded up. This was only a few weeks ago. Very, very nice pickups. We also know that the 20 exponential moving average acts as a little bit of a different dip buying area, and that's pretty much where we closed at through the last session. So this is exactly where you expect people to be picking up positions, people to be going bullish, at least in the short term. And this is where you do see that initial bull buyout. If it closes underneath this level, the next level logically is the 50 exponential moving average. And if it closes underneath that level, all bets are off. And we start to look out further to understand where the puts are expiring. And that's going to show us where we have floors in the market. And I'll explain to you what a floor is. Let's have a look through the puts now together. So this is the open interest in strikes for the quad witching event. Of course, 17th of September, 2021. And you'll notice here we have a huge amount of calls sitting on the SPY around that kind of 454, 450 to 456. This means that there's a lot of retail traders here. With this many calls set to expire and a huge spike off there, it is in Wall Street's best interest to close the positions underneath that. So basically they don't want to pay these ones out ideally. And we need to remember this is the quad witching event, and you can get these graphs inside of our private trading group on Discord. You can of course look at the description down below, 7-day free trial if you're interested. However, this type of stuff I bring to you all the time. So if you want to, you can just also subscribe and we'll check this stuff out as much as you guys like to see it. So here's all the calls. We can see a huge amount of calls. Obviously some poor sucker is not going to make money on these ones with the big puts set for 351. I would say that 350 put was set a long time ago when people were very fearful. So we have some nice kind of what we call put floors, which means the market is unlikely to get underneath these types of levels before that event. Somewhere around here, you would very much not see the market go underneath. There's too much puts there. They don't want to pay them out. But on the other side, they also would never want to pay these calls out. So you expect the market to stay underneath that level coming into, of course, the 17th of September. We then start to push it out into October, and we start to see a little bit of interesting stuff going on here. In October, what you will have here is puts, but the puts are around that 420 level to kind of 430 level. If you go look at Yahoo options, you'll actually see there's a lot of puts that have been entered in there relatively recently. Big positions placed all here. And this creates like a floor for that month. We don't expect usually the market to get that much underneath these levels, but we also think that if the market is going to weaken, see all the calls here stuck at 450, then it's going to go and gravitate towards those zones. That's the type of thing. You think it trades within those ranges during that time. Then it gets even more interesting, and this is the one I really want to bring up. The big amount of puts that have been entered into the November strikes, again, very recently. Take a look at how many puts are sitting here on the 19th expiry. Wow, that's huge amounts. Huge amounts of puts here, huge amounts of puts here, and a ton being entered at $400. So 400 on the SPY. This zone, I believe, is a very big put wall. So what that means is you expect huge buying pressure at a level like that. Now, you'd all be saying, oh, Tom, that would be awesome if it got to 400. I'd be buying that dip. I'd be buying the dip way before that. Absolutely. There's many cases for saying this market's going bullish for quite a few more years. But what I want to point out is once they enter these positions, they usually enter them a little bit early. They do it so that they can, of course, trap retail traders. And these are the types of levels that you want to keep in the back of your mind and you want to look at, because these are going to be where the market is unlikely to go underneath those zones. It creates that floor in the system. Now, we don't know when a 400 put seller is going to take their profit. They could take it if the market went down to $420. Take it out, take some profit. Obviously, that would be very good. But it is interesting to see this spiking into the November position. Certainly want to keep watching this and keep watching your Yahoo options and having a look at the different expiries. And of course, you can see here all the different put expiries. Here's the October ones, and see how much open interest there are at levels. Put horizontal lines on at those levels and just recognize how the price has interacted with those zones. In terms of PCC, let's have a look here. We'll basically have a level across the bottom, which is 0.7. We know this is when Wall Street tends to actually add their puts because they're cheaper to do so. This is also when they tend to spike the market down because it means that they've trapped a whole bunch of retail traders into buying more calls. That their idea is to create euphoria, buy as many calls as possible at the top, and then to spike the market down. So PCC right in the middle of our range. When it's up here, it's unlikely the market is going to fall. When it's down here, it's more likely the market could have, some serious adverse effects. Let's move over now to some other things, and we'll get back onto our indices a little bit later with the key levels that you want to be watching over the next 24 hours to, of course, a couple of weeks. We'll check out gold first. It's come down to our zone. It's found buying pressure once. It's found buying pressure twice. It's rejected twice off the daily 20-50 moving average, which is right here. And if we get a closure above these two resistances here, I think that's actually quite bullish here for gold. We expect the next move 1808. And then after that, of course, to resume hopefully for that 1820, 1830 level. Heavy buying pressure right around that 1780, 1782. And if it gets underneath 1780, 1760, these are your key zones, guys. And there could be some nice day trades over the next 24 hours if it gets through there to this point here. You can see it's very clearly indecisive at this zone right now. Silver is similar. It's trading around that 2420. We need to get above the downward trend line here. I've talked about this a few times. I would like to see silver like this, come back down, and then take it long. And the idea would be to really take silver into 26. I like 26 as a zone, and hopefully silver starts to get better because it certainly hasn't been over the last couple of months. Let's move over to Tesla. We'll go into the stock market now. Tesla's looking really excellent. Weekly, looking pretty good. We've got nice closure here. that could occur through the Friday session. I hope it does. That'll be the first closure above this key zone of around 740. That would show bullish intentions. We're starting to see that ramping, guys. We're starting to see everybody getting excited about Tesla again, and that's what I do like to see in terms of price action. We've also had some great price action opportunities. We've had those triple resistance here that we saw close above, and that moved up. We've had a great reload off the previous resistance. We've had another great reload off the previous resistance. Some great day trading going in here. I know a lot of the guys in the community have been taking this one, and we're looking, of course, for that 780. And then if 780 is reached and then breached, well, anything can really happen here. I mean, that's when you start to see that huge ramping, massive amounts of calls come in. Wall Street probably let it through to the keeper, and it will just continuously ramp. Can we get to a new all-time high by the end of the year? We'll have to find out. But it is the type of price action that you start to look for. And you guys would know that we've been pretty aggressive on it from around this point here, just because it's made sense. You know, you don't fight the price action. We follow the trends. It's like the S&P right now. What's the trend doing? It's up. Are we aware where the puts are? Yes. If the market comes down, what will we be doing? We'll be putting our horizontal lines around those giant puts and using them with our price action analysis to find the flaws in the market if we did see that further correction. So that's the type of thing we want to do. Tesla Flow heat map, very convoluted actually. This is the difference between the calls and the puts in terms of the 5 top strikes. You'll notice a huge amount of puts being put in for the expiry 17th of September. So this is an interesting one because you would think that's almost putting a floor on Tesla. 11.4 negative million puts. So that's the difference between the calls and the puts. That's a big negative bet. Is that Michael Burry? Is it Michael Burry, guys? I don't know. But yeah, huge put bet here. I'm not seeing negative action, but this actually could be a positive for the markets because if there's that many puts, that could create that floor we're talking about. We also have good algo flow, even though the market overall was flat to sideways on Tesla. You do see here this green line. Again, this can be accessed in the private community if you're interested in it for free 7-day trial. Check down below. But check this out. We have that nice algo flow showing that Wall Street's flow was very good for the stock. Now we move over to AMC. AMC had a decent closure. It actually closed above the 48 level. Didn't get above the wicks, but this is a good scaling kind of zone from a technical perspective. We see that closure above. That's significant. Obviously, next level is 52. Can AMC do it? This is the type of thing that some people will be looking for. The next thing is, of course, closing above here, and that is around that 49 level. And then we hopefully see it ramping into the 52 relatively quickly. Not a bad closure. Let's take a look at the daily. See the closure above? Again, decent. Long leg doji. You know when the floodgates open on these types of squeeze stocks, it can get very good. And the market has been known to go down at the same time these have gone up. AMC's algo flow, very positive. Again, when Wall Street's with you, that is a good sign. Take a look at Apple here. I'm not so bullish on Apple. Let's go down to the 2-hour chart and I'll talk about it a little bit. I feel like it's done a lot of what people hoped for. It's also closed below our little trend line that we had up yesterday. So this was the little trend line series of higher lows, closed below there. I'd be looking for Apple to get down into that kind of 150 range, ideally from a technical perspective. And when we have a look at the algo flow was consistent with price. Selling flow coming in from Wall Street, even in the morning when the price was up, the algo was selling off, showing Wall Street already had trapped everybody at that point. They were already selling off. It then went positive for a little bit, but overall negative for the day. Let's move over to US 500. So you'll notice the futures are bouncing at this time of recording right off the 20 exponential moving average and 20 moving average in general. This is a Bollinger on here. Remember, the middle of the Bollinger Band indicator is the 20 moving average, not exponential, but the 20 MA. So that's why the 20 is such a great level to look at. All eyes are on this. Closure below, of course, 50 exponential moving average tends to be the place that it goes to. And if it bounces, it's going to do it here. Look for little lightning bolts. Look for it to close past 45.20 with a strong candle, and then move up to the 45.50. And then, of course, after that, 4600, etc. We still are in an uptrend. The bears, you know, you're really clutching at it, but obviously you're celebrating. The bears would be only celebrating getting under here, getting to here, And then if they break under here, then of course they can celebrate and go eat the fish and be very, very happy with it, because then we're starting to talk about, let's go look at all those put floors for the next couple of months and find out where all those key levels are at, because we want to bring our technical analysis in to try to figure out what that correction could look like. It hasn't happened yet. We're still in an uptrend, and we still should feel quite positive about the markets in terms of overall 6, 12, 24 months time. I still think it looks pretty good. US 100, we take a look at this, absolutely trapped in the channel. You can see straight away 15,520. We've had that for a while now as our key level ever since this long leg doji. 15.7 on the resistance side, and anything in here is just scalp day trade type of situation. So yeah, not much to really note here from the US 100 QQQ, but very nice channel trap. Break either way, we should see some decent distance movement. IWM, the Russell 2000, is on support, but not really loving this chart. I've explained several times why. And the main reason is if I was using this chart, I'd be selling credit. And the main reason I do that is because when you're in a neutralized market like this, it's easier just to say, okay, well, we know we're neutral. We know it hasn't broken either way. Why bother trading in that when we can just sell credit when other people think it's going to break either direction? It's obviously not a solicitation to do anything like that, but it is just the way I think about it. Neutralized market is often a credit market with proper risk management that people look at from the professional side. Have a look at Bitcoin. What's Bitcoin doing? Nothing much. 47,500 is still the resistance breakout that we're looking for here. It is making a series of higher lows, which is good. I would love to see it above 47.5, and then we can start that repair back into the 50s. It's not looking too bad. And yeah, that's what you're looking for. In terms of bad case scenario, you know, if it does come back down to the 42.5 area, if it spikes underneath and then reverses, that will actually be a decent buy kind of signal. If it spikes underneath and then closes underneath, I will not like that actually. So we'll be doing a special event if that does occur. At this stage, I still think it looks all right. We'll check BTC shorts, make sure there's no nasty whales out there destroying us. There is a slight increase in shorts, but it's still very, very low. I mean, look at these shorts, very low, guys. Not something we should be concerned about at this stage, I feel. Ethereum, similar style situation. We have all the moving averages coming down to the 35.50. We're looking for a significant time frame breakout above this. Looks pretty good to me. I mean, at this stage, we have a trough, we have a peak, we have a higher trough. Do we get that higher peak? A classic FX Evolution community style trade, the lightning bolt. Do we get it? Do we start the repair? I certainly hope so. I hope you guys have enjoyed today's video, and please do remember that while some stats might say that of course September is bad and you know it's negative and stuff, we still know it's a coin flip positive or negative. 55% positive this month for the Nasdaq. The only real bad month is realistically Feb. And then on top of that, we need to also think about it. Even though we're on 7 months of streak on the S&P 500, if we came back in 6 months time and you were in stocks, what does the tendency have to be? Well, 93% of the time, the average will be 7.9% or greater from today's point. So it's not necessarily a big bearish kind of sign for the markets here. It's just there could be a little bit of volatility, could be some opportunity. And then if we look at the long-term stats, things are still looking pretty good. Some people will disagree with me. Absolutely. Let us know your comments down below. I'm always interested in finding out more information from the community, and I do wish you guys all the best. Please remember to subscribe, smash that like button if you enjoy the content, and we'll come to you on the weekend with another video and live streaming 1 hour before the New York Open for, of course, the Friday Open. It's going to be a good one, guys. Stay tuned.